Bob Dahl. The S&P is up 6% year to date. It's really bounced back since the Brexit sell-off. So you got a big wall of worries, but it's climbing it.
Sure is, up almost 8% since Brexit, up 20% from the low in February, and as you point out, 6% year to date, beating almost everything else. Stocks are going up, one, because interest rates have come down, so people are revaluing PEs, and because the prospect of somewhat better earnings are on the horizon.
All right, but are they too pricey now? Where are valuations?
I don't think they are, relative to my other choices. Yeah, stocks are expensive versus what they sold at 10 years ago, but I can't buy them 10 years ago. I buy them now, or I buy something else. And stocks are not expensive. When you get a yield on the S&P higher than the 10-year Treasury by this magnitude, stocks should win.
And stocks supposedly trade off earnings. We are in the middle of second quarter earnings season. What's your perspective on earnings so far, especially those financials, because we're getting beats from the banks?
So far, so good. Not just financials, but more broadly. The average beat is almost 5 percentage points. The historic average is about 3. So we're doing better than usual. Why? Oil is no longer down and the dollar is no longer up. They were the big headwinds for the last 4 or 5 quarters.
Now, in the first half, utilities, materials, consumer staples, they led the S&P. Will that be the same in the second half? Because if things are getting better, are people going to transition from defense to offense?
I think the answer is yes. In other words, I don't think the market can have much upside if it's still the old leadership. We need the cheaper industrial, consumer discretionary, selected technology names to do somewhat better, and they will if earnings are better, and then that group that led the first half of the year will fade.
And the Barclays Ag, formerly the Lehman Bond Index, it's up around 4% year to date. So talk about the other choices other than stocks. Are there any other choices right now?
Well, as you point out, stocks up 6, bonds up 4, cash basically flat. Stocks are winning the race. Hardly anyone even knows that, let alone suspect at the beginning of the year. I don't think anybody's going to make double digits, but I think stocks are still the place to be.
For also in the first half, stocks really tracked oil up. Is that linkage broken right now? Because oil's come down. It's now around $45 a barrel. For a while, they were trading in tandem.
Yes, I think the decline in oil and the rise was, oh my goodness, I'm fearful for the system and the financial stability. And the rise was, we dodged that one. Now I think lower oil, modestly lower oil, is actually good for the market again.
All right, now I'm going to put you on the spot. Your 3 mutual funds that you oversee at Nuveen, you got a large cap core, you have a dividend, you have a market neutral fund as well. They just got their 3-year Morningstar ratings, 4 stars each. Congratulations.
Thank you.
If you were to choose one of those 3 funds for this market that would suit it and fit it to a T, which one would it be?
Wow, I love all 3 of my children, as you know. Depends on your view. If you're cautious and think stocks aren't going anywhere, equity market neutral. That's a product that's designed for absolute return. If you want to be exposed to the market, large cap core. It's our plain vanilla flagship fund, hopefully outperforms the market. And the dividend fund somewhere in between, a little more conservative, companies that have decent dividend yields, but more importantly, decent dividend growth.
All right, well, thanks a lot, Bob.
Thank you.
And thank you for watching The Street.